please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome. You're watching Chartbusters on CNBC TV 18, a show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. All that packed in the next half an hour. I'm Mangla Malu and with me is Surabhi Upadhyay. Surabhi, as we start trade today ahead of the FOMC meet and as we see some sort of ease coming in the crude prices itself, a bit of tenterhooks for our markets, right? If you take a look at the Nifty, it's trading at what? 10230, bang in the middle of the 20-day moving average as well as the 50-day moving average. Both of them should come up for you on your screen right now. The Nifty 20-day moving average as well as the 50-day moving average. That's exactly where we are, a narrow range of about 20-25 points.
Yeah, absolutely. And you said, I think two things calling the shots for us. One is which way the oil prices go, and the second obviously is which way the yield is heading, and that is continuing to exert some pressure on the Nifty Bank, which is actually down about 80 points right now. So it's looking pretty weak for the banks and everything barring HDFC Bank. That's the one big one that's still holding out, but otherwise it's fairly subdued out there for NBFCs and banks in general. More as we go along. Let's start off with the headlines. Bharti Airtel gains in an otherwise weak market on news that Warburg Pincus will invest $350 million to acquire 20% stake in the company's DTH arm.
On the result of that, we have Dish TV that gains on the back of the Airtel DTH deal as the street narrows the gap between Dish TV's current valuation and the deal at which the valuation at which the deal itself happened.
Century Textiles in focus after it grants rights to Grasim India to manage, use and control viscose filament yarn business for a duration of 15 years for a royalty payment of 600 crores.
Thalwalkar's in the green after reporting a good quarter. Net profit jumps 25%, revenue comes in 10% higher at 97 crore rupees.
Kalpataru Power surges on the back of an order win worth 875 crore rupees. The management tells us that they will stick to the revenue guidance of 15% and order guidance of 8,000 crores for the current financial year.
Right, let's take a quick look at a couple of stocks then. As far as our markets are concerned, we're still where we were, but Cholamandalam Investment, that one should come up for you. That one has moved to the high point of the day. Along with that, we have a couple of other companies which are moving to. KPIT Technologies too has moved well and moved to the high point of the day. So good time to get a chart check on the markets itself and individual stocks. Ashwani, what's your view on the consolidation that we're seeing in today's trading session? Should we wait for a confirmed upside or a downside?
Well, the takeaway I have is that yesterday we fell because crude prices went up.
Right.
But why didn't we go up because crude prices fell? That means that there is weakness in this market and it's not able to respond to good news. So my sense is once the sideways action is over, we should head lower. So still a good time for people to get short on Nifty as well as Bank Nifty. As far as individual stocks are concerned, Vedanta is a sell with a stop of 292, target of 275. Bank of India is a sell with a stop of 180, target of 168. And Sun TV is a buy with a stop of 900, target of 945.
Okay, you mentioned most of the bank stocks, including the Nifty Bank, is a short sell for you. What about HDFC Bank, Ashwani? Is that also a prime shorting candidate? Because that's the one that's trying to defy the otherwise weak trend within its peer group.
Well, HDFC Bank at the best of times is not the greatest short because it does not move that sharply. But I would think right from ICICI Bank, all banks are shorting candidates because somewhere the market is now trying to price in a worsening inflation and rising crude, etc., etc., etc. Plus, you have a subdued, environment because of impending election results. Hence, no big buying will come in. So, just a little bit of selling will take this down. So, HDFC Bank can be avoided, but I think ICICI Bank is looking weaker than HDFC Bank right now.
All right, Ashwani, a quick word before we let you go on the indices itself. You said sideways movement on the Nifty. So what are the markers that one should keep an eye out on? And for the Nifty Bank itself, tomorrow, remember, is also the weekly options expiry. So what are the markers? What are the key levels?
On Bank Nifty.
And Nifty.
See, on Nifty, it's basically 10,100. You're hardly 120 points away from that. So back to those levels. On the Bank Nifty, I think things are a bit worse than on the Nifty, maybe 24,500 to about 24,700. Again, a lot depends on events, etc. But the market will be, subdued, sideways to down. I don't think there is great upside expected unless we are able to cross 10,250 consistently.
Okay, all right, Ashwani, thank you for that market call as well as the trading ideas that you've just given us. Right now, it's time to focus on a couple of important stories from the banking universe. The Reserve Bank's deadline for banks to resolve the 28 large stressed accounts that the regulator had identified in its second list ends today. Banks will be forced to send these large accounts into the NCLT for insolvency proceedings. Unless and until they can come up with a plan in the next couple of hours, pretty much. Ritu Singh is joining in with more details. Ritu, so does it look almost certain? Are all of these accounts going for insolvency? And what happens to the big one, JP Associates?
Well, Surabhi, not all will end up in the NCLT. As we said, there are very few, actually handful of accounts that have found resolution outside the NCLT so far. Those are Andrick Aluminium, Jaiswal, Nico, Built, Soma Enterprises. There's also the curious case of Uttam Galva, where we understand from some of the bankers that an ad hoc rating has been given on a proposed resolution plan, but whether or not that has been accepted by the OC is something that remains to be seen by the end of today. Jayaprakash Associates, the other interesting one. The bankers have been in talks with the regulator to give them a special dispensation, allow them to keep JPA out of this 28 list. But so far, they've had no such luck and are not really expecting much from the Reserve Bank of India in terms of an extension. So that means all of these remaining, from this 28 accounts list will end up going to the NCLT. And we also understand that banks have been asked informally by the RBI to send these accounts to NCLT before the close of the year, that is by the 31st of December. So between now and 31st, expect a lot of them to be sent, under the insolvency proceedings, which, remember, by the way, this almost totals over 1.5 lakh crores of debt, close to 2 lakh crores, in fact, with all the interest accruals. And 50% provisioning will have to be made by the banks for most of these accounts. So expect a big hit on the third quarter earnings for all of the banks involved.
Absolutely, Ritu. That explains the kind of weakness that we're seeing in the banks as well. But stay on with us. We also learned that the race for Monnet Ispat itself is heating up. Of course, you've given us a list of the top contenders yesterday, but who's leading that race and any other names coming in the fray now?
Mangalam, the bids closed yesterday, and from what we understand, only Aon and JSW as a consortium have emerged as the sole bidder, so to say, to acquire Monnet Ispat. We also understand Tata Steel till the very last minute. I mean, there were talks with the lenders, and they had conducted due diligence, but did not decided to not put in a bid the last minute. And the reason, of course, we don't know. But yes, Aon, remember, is a consortium between ICICI and Apollo, and they, along with JSW, they are the larger, party in the consortium with JSW. They have made an all-cash offer to buy out Monnet Ispat. What the offer is, we're not very clear, but one thing is for sure, the liquidation value of the company, remember, has been ascertained at about 2,300 crore rupees by the IRP. If the bid is lower than that, then the bankers may even look at liquidating the company, but the COC will be meeting today to evaluate this offer. The other, thing that could happen is the COC can even decide to reopen bids if they feel that, more bids could come in the next time around. So it remains open for now. But yes, JSW Aon is the only contender as far as the acquisition of Monnet Ispat is concerned.
All right, Ritu, thanks so much. The rest of the market struggles. Oil and gas really is the story today. So you've got a move that continues on the downstream marketing and refining companies, IOC, HPCL, BPCL, all of those stocks are moving higher. Reliance has been the other leg of support for the market, which is making sure that we don't entirely break down in negative. So that story continues. ONGC is also up about 1%. But as we promised, let's get a conversation going with Sadbhav Infra and find out what the growth outlook is for the company, because the market is getting extremely positive about road contracting companies, road builders and infrastructure majors. We have Nitin Patel, ED of Sadbhav Engineering, now on the line to give us a sense of the business. Mr. Patel, I will start with some of the projections that you had given after a conference call that took place in November. You are talking about a revenue growth of basically a revenue of around 3,800 crores by the end of the year, with a margin band of around 11 to 12%, I believe, sir. Can you start off by giving us a breakup of the profile of orders that you have at hand right now? How much is HAM, how much is BOT, and what the visibility is?
If I see total, currently we are sitting on a order book of around almost 9,400 crores. So out of these 9,400, if we see that the irrigation outstanding is almost to the tune of around 900 crores, mining is around 1,300 crores, and the rest all is basically road contracts, basically divided between EPC and hybrid annuity. So out of the total road contracts outstanding, almost around 1,100 crores are the road EPC, and the rest are the hybrid annuity projects which we have to execute. That is the 7 hybrid annuity projects.
All right, 7 hybrid annuity projects and 9,000 crores in terms of order book. But Mr. Patel, you know, we understand that the NHAI is likely to expedite its ordering or order awarding activity in December itself, because it had that 10,000 kilometers target. We're in the middle of December. If you can tell us what exactly is happening on that front, are orders being tendered for, are bids being invited, and how much do you expect in terms of Sadbhav Engineering to benefit from those likely orders?
First of all, till now, from April till now, actually, NHAI has already awarded some around 1,200 kilometers of the contract. So that is already been awarded. But as of now, what is there outstanding on the website of NHAI, for which they have already invited the bids. So the outstanding is somewhere around 3,700 kilometers. So if we break out these 3,700 kilometers, so around 640 kilometers is a TOT. So and the cost is around almost 6,200 crores for this TOT. And also one EBFOB toll project of around 100 kilometers, and the cost of that project is 2,100 kilometers. But the large chunk is the hybrid annuity and the EPC. So around 36 projects are there into the hybrid annuity, and the value of all these 36 projects are almost to the tune of 41,000 crores. And around 41 EPC contracts where it to be basically for which the bids have been invited. So all put together, this 3,700 kilometers, and the value of all these contracts is almost to the tune of 78,000 crores, which is showing on the basically website of NHAI as of now. So definitely we are of the view that a lot of bulkage has happened, and the coming period of time, there will be a series of bids. Almost we are expecting that on an every day there will be a bid.
All right, every day there will be a bid. 70,000 plus crores is the total order value, is what you're saying, Mr. Patel. So 2 questions then. One, how much of this do you expect to win? And secondly, what kind of margins can you make given the sort of quantum? I'm sure there would be competition as well, right?
Correct. See, in terms of the winning, definitely it will be depending upon basically what is the competitive intensity. But in hybrid annuity, we are still of the view that these 36 projects which are there is enough basically business for all the players into the road sector who are bidding the hybrid annuity project. So we expect that there will be a sizable orders will come from there, and because recently 2 days back we won another Jodhpur Road project to the tune of almost around 1,100 crores. But we are expecting to add another 2,000 to 3,000 crores from the hybrid annuity by the end of this year. And out of the 41 EPC contracts, definitely the competitive intensity will be more. But our view is that we will be continue to bid within the range of 11 to 12% of EBITDA margin.
Okay.
So at what the same margins we will continue to get the bids, so definitely we will add it. But
Sure.
it depends upon the competitive intensity.
So, Nitin, I'm going to take a step back because we've got a lot of numbers from you and going to keep it very simple. You did mention that your road order book, 1,100 crores is EPC. There are 7 hybrid annuity projects that you are looking to execute. Now, give us a target. Give us a order book target for, let's say, FY19 for the roads business. How much is going to be hybrid annuity in a rough percentage sense, and how much will continue to be EPC, and what works better for you? I'm guessing HAM just works much, much better because 40% of the cost is coming in from the government, so you have to raise that much lesser debt, right?
This is fine, but ultimately the business will come in a mix of both, actually, EPC and HAM. But if I say that, as I have mentioned, for the current FY18, we are still looking to add another 3,000 to 3,500 crores of the new business for the construction execution. And this will be again a mix of the EPC and HAM. But FY19, obviously, we will be looking to add another, basically, say, 7,000 to 8,000 crores of the new business from the road sector alone. And that will again be from EPC and HAM put together. And going forward, what the NHA and the Bharatmala, how basically the configuration has been defined. So we are of the view that will be enough traction for the highway sector for coming at least 3 to 4 years so far as execution business is concerned.
Right. Mr. Patel, if you could give us an update on the 3 projects which were under arbitration and you were supposed to receive about 625 crore rupees. Have you received it? By when do you expect it to come to your books?
So, no, see, ultimately, that is the proceeds are on actually. So, out of the 4 arbitration proceeds, 1 we have already received the award for Rohtak Panipat, and 3 another projects, namely the Nagpur Shivani, this Dhule Parasmer, and the Mumbai Nasik, the arbitration proceeds are on. We are expecting that within 1 year the awards will be there in the play.
Okay, just a question on the debt, because there's been an exercise to reduce debt this year as well. What kind of second half targets are you working with? I mean, some of the reports that I'm going through are saying that, you know, first half you reduced it by about 350 crores, and there could be a further 200 crore rupee reduction in the second half. Would that be an accurate estimate?
See, that is the minimum target what we are basically we have given the indication. So obviously this may go further down because that is a large number is coming from the recovery proceeds of our basically receivable. So that is what we want to see. And this 200 is easily achievable. That's what we are basically.
So end the year with a debt equity ratio of?
See, practically, we are seeing that going forward by the FY19 or somewhere else, actually, we are seeing the debt equity should come down as low as between 0.6 to 0.5, actually. So that is the target for supply.
All right. Thanks a lot, Mr. Patel, for joining in and